Hey guys, today I want to talk about things you need to know about adjusting entries if you want to do well in accounting. In the accounting cycle, we first record and journalize these transactions and then post them to the ledger. Then we formulate a trial balance at the end of the accounting period. But the question is, what happens at the end of the accounting period? Adjusting entries therefore record when revenues have been earned and expenses have been incurred. So if the current balance represent a correct amount, journal entries are needed to be adjusted to the correct balance. Today I'll be talking about 4 scenarios that can occur during adjusting entries through the example of The Simpsons. To demonstrate our first scenario, Disco Stew decided he wanted to become groovy with online streaming. Up front, Disco Stew paid $360 for a 2-year Spotify premium package. Spotify will be receiving cash for services they have not yet provided. This is called deferred revenue. When the company has not yet provided the promised service, they cannot record a revenue in the system. Thus, the money is put into an unearned revenue account, credited because it is a liability. Every month forward then on, we'll see liabilities decrease and equity increase. For the second scenario, accrued revenue shows that companies will provide the service and then collect cash afterwards. In Futurama, Fry, Leela and Bender provide a delivery service. A client demands that he will only pay when the team delivers all his goods by July 31st. The team completes the task and bills the client the invoice of $6,500, creating an increase in accounts receivable. August 25th is when the client pays for the service. The journal records the Panda Express does not need account receivables because cash has been received. Along to our third scenario, Apu is required to own insurance for his store against any damage like theft. He purchases a yearly insurance policy for $24,000 in April. When a company pays for a resource before it is used or consumed, it is referred to as a deferred expense. The prepaid insurance account is debited because it is an asset to the company. Suggesting that they have made a financial statement on the 31st of April, Apu would have used 1 month's worth of prepaid insurance, consuming 1/12 of the asset altogether. The adjusting entry debits the insurance expense as the account grows and increases, while the assets deplete every month forward. Moreover, to illustrate accrued expense, Mr. Byrne pays his employees at the nuclear plant weekly, with the payroll processed on a Saturday after hours. The work week is from Monday to Sunday, although this year the accounting period ended on a Tuesday. The journal entry showed that there is only 12,000 processed for the December period. This was because for the weekly period, employees are recorded only working 2 days of the 6-day working week. The workers are payable $12,000 and thus is a liability for the company. In January the 5th, the liability is decreased as it is being paid out. That is all from me today, and I hope you enjoyed my screencast.
Created using Powtoon.